if it reaches out, just that our requirements are so strict that the merchant loses the interest after a couple of weeks of doing the onboarding with us. It's like asking for a sports car to go off-roading. The customer is waiting for his money, and you don't want the customer to have a bad experience.
Jamie Dimon saying, no, it's crypto, blockchain, no. And then literally a year later, they announced, oh yeah, we're actually doing things with blockchain. Hi everyone, welcome back to another exclusive interview on FinanceFeeds. My name is Nikolai Isaev, and I'm joined today by Eran Ten Napel, who is founder and CEO of iLedgends. Eran, thanks for taking the time to join me today.
Thank you for having me.
So I think today's discussion is going to be all about payments because iLedgends is, well, you'll describe to our audience what you guys do. Tell me a little bit about how the company got started and how you found your way here in Cyprus.
So I founded iLedgends 3 years ago after being 17 years in the payments in various roles. I was chief risk officer, CEO for different EMIs, and I really felt the need, also on a personal level, but also on a business level, to build something to say, okay, if I don't try it now, I will most likely never try. And I also felt really from my experience the need to build something that is really niche specific. So what we have been building in the last 3 years with iLedgends is really to build a EMI that is purely focused on compliance-intensive businesses.
Okay.
Meaning that we're not there to compete with the traditional banks or traditional EMIs that really focus on mass onboarding of customers, specifically in the low-risk sectors. We're here really to support the compliance-intensive businesses. So, which means we are not discriminating any industries.
Yeah.
And we are basically building specific frameworks for each one of the industries that we are on board, whether it comes to onboarding or transaction monitoring. That is really what we do.
You just mentioned high risk, and I think we could all agree that if we look at CFDs and prop firms, again, these are topics that I speak to a lot. When we talk about that segment, it's often automatically labeled as high risk, right? And I guess I wanted to ask you, from your perspective, from an EMI perspective, what does that label often miss? That all of a sudden, yeah, I'm a CFD broker, so all of a sudden I'm high risk. And how should regulated institutions kind of approach these kind of customers today?
So yeah, definitely CFDs are considered high risk, to say, for prop trading. And I think there is no issue with the fact that industry is high risk. As a EMI, as a regulated EMI, we're regulated by the Dutch central bank, which is one of the top tier regulators in Europe. So of course we have to be very cautious with the types of merchants that we onboard. CFD brokers have been existing for so many years. It's basically CFD Forex is a business that came from the traditional banks, and you can consider the CFD and Forex brokers really as more fintech companies that are basically selling the same products to consumers.
Yeah.
Our approach to CFDs is very open. We have been working with CFDs for the last 3 years. And myself, as a chief risk officer, I've been working with CFDs for many, many years. And the approach should be a risk-based approach. And that's what each EMI should really apply. And that is also what you see as the recommendation from the European Central Bank when it comes to onboarding of low risk or high risk, to apply a risk-based approach. We have built a specific framework for CFD brokers, just like we do for any other industry, where we really, let's say, look into specific areas. For example, we will check the AML policies, we will check the compliance and the risk team of such a broker, the countries where they're processing, the transaction flows, whether it's consumer to business deposits, business to consumer deposits, and so forth. And therefore, since we're so familiar, we've built a specific framework for CFD brokers. We're very comfortable in onboarding them. And CFD brokers is a large part of our portfolio. We work really with major players in the industry because we are very familiar with the industry.
Yeah.
We have built a great framework, which is let's say, ensuring that we remain compliant and ensuring that the merchant also receive the service that they need. The last thing CFD brokers want to do is work with EMIs that are not familiar with their business model, because then they run the risk of onboarding, getting the client, or taking many months, or simply one day being de-risked from the bank. And that's what we avoid by building specific frameworks.
You spoke just right now a lot about CFD brokers, but what about prop firms? Because for me, maybe a little bit of a layperson,
Yeah.
prop firms don't seem to be a high risk business. At the end of the day, for me, when I think about prop firms, no offense to any prop operators, but
Yeah.
it's like a video game.
Yeah.
You're paying to participate in okay, maybe not a video game, but you're participating, paying to participate in a challenge. In my sense, you're a regular merchant selling an online service. Tell me what you think.
I completely agree.
You
Yeah.
probably disagree.
No, I actually don't disagree, and I think that there is a lot of confusion by prop trading as the traditional form, which is a product that the banks were offering, which is then considered a financial product, to
Right.
prop trading, which we are referring to, which is typically an e-commerce merchant that is selling an education package where
Right.
people
Okay.
can basically, once they pass, upgrade the packages and basically trade, but still they are trading not in a live environment. They're not having their own trading account. So these are not considered client funds at the end of the day. We consider that as e-commerce. However, there is a lot of scrutiny in the industry, but that is happening not because of the business model itself.
Yeah.
It's because, let's call it, the risk of other, let's say, companies with not so good intentions to use that model as a front shop for real CFD trading. And I think that is where you see a lot of EMIs and traditional banks staying away from it. We are very open to prop trading, and we seriously treat it as an e-commerce product. So I completely agree with you and not disagree with you on this. And we definitely also work with prop trading firms, some of the largest ones. And it's a complete different business model than CFD brokers. But just like, I think it came, let's say, in the last few years that it really, let's say, started to bloom, this industry.
Yeah.
And I think just like with many industries, it takes time for EMIs, for banks to get familiarized with new industries, really understanding it. And that is really the biggest issue, where if you ask now one of the bigger banks, okay, to onboard prop trading, they do not, it's not their business model. And they do not want to investigate, do not want to spend the time to do manual compliance onboarding for those firms.
Yeah.
And that you see also with other industries. So for us, it's very important before we enter into a new industry to actually really learn the industry,
Yeah.
see what the business needs are for our customers, to make sure that once we onboard a customer, we do it efficiently in a timely manner, and that customer receives the best service. And personally, I consider prop trading as a low-risk industry. It's an e-commerce platform selling education at the end of the day.
I wonder, actually, CFD brokers, prop firms, again, if we're talking about assessing these businesses, I guess if you're a big bank or a traditional bank, for example, you might look and see and say, well, there's no regulation of this specific segment, right? Because that's one of the big talking points today is who's regulating these e-commerce businesses. And the answer is there isn't really any regulation, aside from maybe some things in the United States that these companies have to do to do business. But other than that, in other parts of the world, it's kind of like you can set up a prop firm in whatever 2 weeks and start working, right? And so when it comes to the more traditional EMIs, I've run into something like this, something similar, where it's like, oh, if it's not regulated, that means it's high risk, shady, whatever it may be, and we're not going to touch it. Is that sort of the case here?
That's exactly what is happening. What is happening is these EMIs, or traditional banks, are basically asking for legal opinions which do not make sense at the end of the day. Because let me ask you this: if you're now a education platform selling books for gambling, or offering similarly, let's say, a training platform for people to be able to do sports betting,
Okay.
would that be regulated? No. If you're if you're selling now books online, would that be regulated? No.
Right.
So and that's what you see often, this misunderstanding of banks because they're not, let's say, investigating it, or they're just trying to find ways to push it away without, let's say, getting into an official decline, meaning that they're saying we don't want to get into an industry, but let's make sure then we will not officially decline it, but let's make sure that if it reaches out, just that our requirements are so strict that the merchant loses the interest after a couple of weeks of doing the onboarding with us. And these are requirements that absolutely do not make sense because prop trading is not a regulated activity, and therefore you shouldn't have a legal opinion for that. And in my opinion, if a EMI thinks that he should have a legal opinion, I personally do not. But then I would personally ask my compliance to speak to a law firm and ask for a legal opinion that states that this is not a regulated activity, and no licensing is required, and you can onboard it as e-commerce. So that as a EMI, if you feel the need for it, you can make sure that you are protected as much as you can, of course, with such a legal opinion. But that is not part of our onboarding process because, again, we treat it as genuine e-commerce, which it is.
Can we take a step back? You mentioned a Dutch EMI license, and I wanted to ask you separately, why the Netherlands? Because there's so many other jurisdictions where EMI licenses are issued today. In this country where we're recording our interview now, in the UK, in the Baltic states, etc., etc. There's so many different countries where you can get an EMI license. Why a Dutch EMI for iLedgends?
Very good question. So indeed, for us, it was very important to have a tier 1 license in order to build trust in the market. And indeed, Cyprus is a good jurisdiction. So is Malta, Lithuania, UK, etc. But for us, it was very important in order to also build credibility to do that in the Netherlands. Also, I'm Dutch partially, but that's not the main reason. But it's also been a fantastic experience till now with the regulator when it comes to the openness. And in my discussions with the regulator also, there's been such a need in the Netherlands and across Europe for EMIs such as iLedgends that are really targeting compliance-intensive businesses. So we really welcomed our business model in that perspective. And there are different articles also by the Dutch Central Bank about the de-risking issues that merchants and individuals are facing in the Netherlands. It's one of the largest issues in the Netherlands and across Europe. Also, the ECB released the CTR report of 25, stating it's one of the 3 major issues in Europe, the de-risking of customers that are compliance intensive. So based on the reputation of the Dutch Central Bank, based on the market need, we decided really to focus and to obtain our license in the Netherlands, which is considered one of the 2 most difficult licenses to obtain.
Interesting. So it's kind of like, I don't know if we can say this, but the Dutch regulator is essentially progressive if we compare them maybe to some other jurisdictions where the economic environment itself set up a situation where they're more progressive. They understand that there is, on the one hand, money on the table, and on the other hand, these are industries that, okay, fine, you might be labeled as high risk and things like that traditionally, but there's a way to approach them. There's a way to classify them, assess them, and do business, right?
Absolutely. But when you look at the Dutch central bank, the Dutch market, every regulator wants to make sure that customers in their country are able to be served by local customers. For example, in France, if you're not able to obtain a bank account after 2 tries, the court will actually choose a bank that needs to open a bank account for you. Not that you will have a good experience afterward with that bank that has been forced, but yeah, when I started applying for an EMI license, when I started the business, I had to consider, okay, what is really the added value that we're going to bring to the market? And let's face it, I didn't raise any funds for the business. And I basically built this business by myself. And it would be silly of me to try and compete with other, let's say, low-risk EMIs or banks. So my whole business model, our whole business model has been around dealing with compliance-intensive customers, and we were very open about it. We were very direct that we're not planning to go after any low-risk industries. It's not. We really want to become a niche player, and we were really welcomed in our conversation, as long as we know what we're doing, which is critical. One thing is obtaining the license, the other thing is maintaining the license. And what the regulators want to see, what the Dutch central bank, of course, also wants to see, is to make sure that you know to manage high risk, that you apply enhanced due diligence, and that you onboard the correct players in every industry, whether it's prop trading, CFD, or any other, let's say, high risk industry. You need to ensure that you onboard that you have the right policies, procedures in place to onboard good customers, good merchants. That because in every industry you have bad actors and good actors. So it's our responsibility to ensure that we have the tools, that we have the knowledge to onboard the correct players in a certain industry, and that's what we're facilitating. We are open for any industry, as long as we're dealing with the correct customers, as long as we are confident that our business model is legit and they're acting under their requirements as a regulated company, CFD brokers in that stance, and this is very welcomed by any regulator, I believe. But I believe in certain areas it's not really welcomed by any regulator, which are more conservative at the end of the day. And definitely the market is the Dutch market is a big market. It's a progressive market, and it's a fintech hub at the end of the month. At the end of the day, sorry.
Yeah, absolutely. I wanted to go back and speak a little bit more about, let's say, CFD brokers and prop firms, or again, let's say trading firms, right? In let's say more general terms. To me, it's 2026. It seems like payments are a strategic part of these companies' infrastructure now. I mean, you can't really do business if you can't acquire funds from your clients.
Absolutely.
I guess to me, maybe it's not a stupid question, but for me, it's a question that's easy to answer. But I want to get your insights on it in terms of like if you're a trading firm, but you have a weak payments setup, right? When do you start seeing issues and limitations, especially when it comes to growth or, like, let's say, expansion? I mean, again, to me, it's kind of like, well, okay, the more payment options you offer your clients, the better, right? But at the same time, I feel like if you want to have, let's say, a very robust payments infrastructure, you need many, many, many different individual, I don't know, setups or whatever you call it. Because to me, in regions like, let's say, LATAM, Africa, it's certain parts of Asia, it's still very fragmented. Whereas Western Europe, United States, etc., Canada, everything is hunky-dory in the sense that, everybody's financially literate. There's banks, there's neobanks, and all of these things. I guess, what's your perspective on that? And how does iLedgends fit into helping trading firms kind of develop a robust and, let's say, international payments infrastructure? Sorry,
So,
very long question.
no, it's a very good question. I think what you see today with the larger trading firms is that they really have specialized payments teams, and there is a good reason for that. So, sometimes I say that the payments teams of the trading firms, they're at such a size and so professional that they, could teach a couple of things to certain EMIs and banks. It really comes down to that, because they're constantly looking for new ways in order to allow the customers to deposit. And there are two reasons for that. One is that they know that they need to work with more than one financial institution, because they're aware of the de-risking issues in the globe, and they cannot afford to work with only one or two providers, because what happens is tomorrow one of the providers decides, okay, I no longer accept this certain industry because I had one or two merchants that didn't perform well, and this happens all the time.
Okay.
And that is the reason why they are splitting their volumes between different providers in order to mitigate their own exposure with the payment providers, which are an exposure today. The same goes for us as an EMI. We can never depend on a single corresponding bank. We always need to have multiple corresponding banks. when it comes to managing our risk exposure with corresponding banks. And the same applies for trading firms. The other criteria is that they need to expand their reach in different markets, emerging markets where traditional SWIFT bank wires, for example, it won't work. So we also constantly get the feedback from our customers during this time, and what is really important for them. We are, let's say, focusing on wires, but we are also enabling local wires in different jurisdictions that they can collect locally from their customers and then send out the funds either in a blockchain or either in Swift to the currency that they need. But for these trading firms, it's so important to allow their customers to trade as soon as the customer wants to trade.
Right.
And you cannot afford now to wait 3 business days, 5 business days for a wire to arrive. So if you take, for example, markets like India or certain markets in Nigeria and Africa, and you will try to make those wires now through Swift, it will most likely not work.
Yeah.
But if you have local collections with a local bank in Nigeria or in India, you can collect locally and you can collect instantly. And this allows the trading firms to allow their customers to deposit instantly and to trade instantly. And this is very, very critical.
Great. I wanted to go back to the topic of de-risking, because, and you just mentioned, if we're talking about a very robust and global sort of payments infrastructure, you said like part of the payments team's jobs is to sit there and be like, all right, if anything ever goes wrong, right, we have to have different, let's say, EMIs or local providers that we can switch on and off, because I think one of the risks is de-risking, right? And an EMI or a payments institution one day might tell you, hey, sorry, we're not going to work with you anymore. Forget about all the details about what happens in that kind of situation and like money gets blocked or something like that. I guess my question is, on the one hand, what usually triggers this kind of de-risking at EMIs or payment firms? And how do merchants ultimately, whether they're prop firms, CFD brokers, let's say other high-risk businesses, whether it's sports betting or something like that, how do they find the right relationships in the first place to not have to worry about these kind of things, let's say on a daily basis? Like how do you do that,
Very good and difficult question. No, for the merchants, it's a complicated situation, and when it comes to the reasons for EMIs to be de-risking, and what you see often, there are several reasons that can happen. There can be what you see very often, that certain EMIs or banks, they decide that they want to try a certain industry because it's commercially attractive, viable, and they need to, meet their numbers. And then what you see is that they lack the experience and expertise in an industry, and that is a terrible experience for the customer at the end of the day, because they're not investing enough time in actually learning the industry before they start to get into an industry. And if you really want to get into an industry, you really need to know the ins and outs. You need to build a framework for it in order to treat it at the end of the day like any other customer. Just it has its specific risk factors that you need to manage. So they get into an industry to try. They start, they work, and then it can be 1 or 2 bad players that they have experience with, and then you'll see that you'll have compliance sitting and saying, no, we cannot work with this industry anymore. So that can be one of the reasons. It can be that the corresponding banks are not allowing for a certain industry to take place. It could be a restriction coming from the regulator, which is, again, if you look at the last 2 years, how many EMIs have gotten restrictions from the regulators, have gotten fines from the regulators, have lost their licenses by the regulators. I cannot count them on 2 hands in the last 2 years. And I'm talking about, different regulators, different regions in Europe and in the UK, where de-risking is happening because, again, those financial institutions, EMIs and banks, simply do not have the expertise, the frameworks in order to cope with the higher risk, let's say, industries. They simply do not specialize in it. It's like asking for a sports car, to go off-roading at the end of the day.
Yeah, I
Will it succeed? Maybe here and there in a certain, but it most likely will not succeed. So there are different, let's say, elements that can cause the banks to de-risk. And from my experience, what I've also seen is that you have certain merchants, okay, they will start trading, and then all of a sudden they get a chargeback or recall, and and then the EMI is like, oh, how can this happen? How can this happen? Um, if I tell you the ratios in e-commerce when it comes to
Chargebacks and stuff.
chargebacks and stuff for airliners, which are considered ultra high risk at the end of the day, there are recalls and chargebacks everywhere. But again, it's a matter of experience of many EMIs where they just simply don't know how to manage a certain industry. And to the second part of the question, sorry, it took me so long.
No. I framed that question in a very difficult way.
But the second part of the question was, okay, how do merchants deal with it?
Like how do let's say CFD prop firms, high risk businesses, how do you find the right relationship? Because it seems to me like we all go to the industry conferences, right?
Yeah.
From what we've been saying today, it's kind of like you approach me, you're an EMI salesperson at an EMI, you approach me, you're like, hey Nick, I can give you, I don't know, hypothetically speaking, 0.5% on these kind of deposits, right? And I'm like, oh, wow, that is super low as compared to what I'm paying today in this particular region, right? So you're enticing me from basically a cost and fee perspective, right? And let's say I go back to my boss and I say, hey, boss, right now we're paying 2.5%. These people are only going to charge us 0.5%. So commercially, it looks very, very enticing. And sure, when I start filling out the paperwork and I start submitting my application, then I get hit with what we just discussed.
Yeah.
Tons of paperwork, all kinds of scrutiny. Let's say I get approved. Fine, you're charging me 0.5%. But then 8 months goes by and then boom, I'm done, right? So how does a merchant find the right trusted relationship ahead of time, right? I guess not how do they get duped by very attractive fees or commissions, but how do they find the right relationship? Is it ultimately like you said, there's companies out there that are saying, look, we already understand your business, we already understand your business model. We have to go under the hood of the car to see what's there because ultimately everybody does.
Yeah.
But we already know where the radiator is, we already know where the oil pan is, and we know how many cylinders your car has, right?
Absolutely, and that's exactly the point. Just for us as a company, as a regulated EMI, when I choose a banking partner, we also need to choose our banking partners, right?
Yeah.
We do our due diligence, and I recommend for merchants to do the same. Because at the end of the day, would I now want to work with a corresponding bank that shies away from high risk, that shies away from CFD and prop trading firms? No, because it will impact our business, it will impact our customers' business, and ruin our reputation. So when we select a partner, we look at, okay, how many customers do you really have in this sector? How long have you been operating in the sector? Does the partner really understand the payment flows that we require? How does the support work? Do we now depend only on AI bots, or can I actually pick up the phone and call someone?
That's a good point. Yeah.
Which is so critical when it comes to especially CFD trading, because customers need to trade. They cannot afford for funds to be blocked.
Yeah.
It needs to be instant. So we are looking at all of these elements when we are choosing a partner, because and I strongly recommend for customers to do the same. It's the same when you're choosing a technology banking platform, and you need to really see that that partner has experience, long experience. What you're doing, you need to do the due diligence to see whether how many customers got their account shut very quickly, and for what reason. Was it reasonable? Because that can also, of course, be the case. But is it just because you get one or two recalls and the bank decides to close you down? You invest all of your time, all of the money,
Yeah.
and selecting a partner,
Mhm.
doing an integration, using all of your resources just to be de-risked after a couple of transactions,
Mhm.
that doesn't make sense. So there are EMIs out there, and we are one of those EMIs that really come and
Sure.
say, we understand your business. We have a proven track record within iLedgends in the last 3 years with this industry, working with industry leaders. But our experience comes long before that. It's over, 15 years of experience in this specific industry
Mhm.
that gives us, how to say, the confidence, and the merchant, more importantly, the confidence that they're working with a player that understands their business. And for sure, there are a few great EMIs out there, which a lot of the merchants already work with, because they really understand the business.
Mhm.
And this is, I think, the most critical part of selecting a partner.
Mhm. Great. Um, we spoke about the fact that for, let's say, CFD brokers, customers want their money to be deposited
Mm.
instantly because they want to start trading right away. Or if they already have a trading account, a lot of times they're on a margin call
Yeah.
and they want to deposit funds as quick as possible. But I wanted to sort of talk about the flip side of that and payouts at prop firms, because
Yeah.
it seems to me like at prop firms it's a little bit reverse, because when they buy challenges, it's a
Yeah.
simple credit card transaction,
Yeah.
I would think, usually. But on the payout side,
Mhm.
it's something that for prop traders, it's, I think, one of the most sensitive things for them. Like, how quickly can I get paid out, right, for the challenges? And from your perspective and your experience at iLegends and working in this segment, kind of what makes the prop firm payouts challenging, I guess, from a compliance perspective?
Mhm.
And how do you think it needs to change to kind of instill confidence in everyone,
Mhm.
especially in I think both the EMI providers like your firm and in the prop firms and their traders, to for everyone to be sort of equal and for these things to flow efficiently.
Mhm. So it's a old, let's say, problem. I would say, from my experience,
Okay.
it's a big problem that you're mentioning, and it's becoming a bigger problem constantly.
Uh-huh.
Um, what is happening often is that customers will choose to deposit with a certain payment method, right? So let's say they go to a prop trading firm, and they decide to deposit with their Visa card.
Mhm.
And now they need to get paid out a larger amount. And you cannot pay out that larger amount with
Yeah.
the card,
Mhm.
because the limitations of that EMI, not of Visa and MasterCard, because Visa and MasterCard allow payouts of winnings, but a lot of EMIs obviously have not implemented it. So
I see.
then the merchant needs to basically pay out his customer, and
Mhm.
the sooner the better, indeed, because the customer is waiting for his money, and you don't want the customer to have a bad experience.
Yeah.
You don't want the customer to feel, hey, what is going on? Why am I not getting paid out? To start freaking out, saying, hey, am I ever going to get my money?
Yeah, yeah.
And then the merchant, okay, says, okay, I can pay out through my bank, but then the bank says no,
Mhm.
and it's a huge issue. So from the bank side, they've not seen the incoming transaction.
Mhm.
They've not identified the payment method. So it's okay. Where did the money come from, and where is the money going
Going.
to?
Uh-huh, uh-huh.
Right. So that's from an AML perspective. They're concerned,
Mhm.
and that's easy to. It's very easy to basically resolve that
Mhm.
without getting into too much details. It's very easy to identify the source of funds of the transaction in order to allow for the payment of winning to go out.
Sure, okay.
So and it's a huge requirement. So and it's, again, I think, the lack of understanding of the industries, or
Mhm.
about certain payment flows, which is obviously good for us, because we're able
You understand all of
uh,
that, right?
uh, we understand the business. Our compliance will know how to build the framework. We've built frameworks for this
Mhm.
to ensure that the payout of winning goes out as smoothly as a incoming payment, with a predefined process that we have, that we inform the merchant prior to, so he understands exactly, okay, how does it work? When do we need to collect additional information? And again, applying there also a risk-based approach. You do not need for each transaction now to collect information. You need, in certain cases, imagine high-risk jurisdictions, imagine very large amounts where it's okay, I need to collect evidence on this transaction because it's considered as a high-risk transaction in transaction monitoring. So, and this comes again to the basics of, okay, EMIs, banks, not understanding the business model and not willing to invest in a manual process sometimes also in order to facilitate
I
it.
see. Is it also a matter of when we talk about prop firms, if we go back to the prop
No.
firm question, because again, there's so many prop firms that kind of new companies that keep popping up. I mean, there's obviously a lot of big existing players in the industry as well. Is it also a matter of, when a new firm is setting up, obviously you have lots of upfront costs. Is it also a matter of, okay, I'm not going to do these steps right now because I just need to get up and running and, uh, for me to properly set this up, I need to spend a lot more, even just let's say operational time, and opportunity cost is involved. So I'm not going to go through with this. And yes, I'm going to be lacking in some ways in terms of competitiveness. So like when my traders buy challenges and then they're looking for their payouts, I'm going to say, well, it takes 48 hours. And I know that my competitors offer it. There's a lot of companies today that say instantly, you're going to get it the same day. Is it also a matter of that? And if the answer to it, tell me yes or no. If the answer to my question is yes, then I'll follow up with another question.
It is a yes. Yeah.
It's yes, right? I mean,
Absolutely yes. I think, look, when you're starting a business, and it's not an easy thing to start a business, and you have limited resources, limited operations, and a lot of them want to start as fast as possible, and it's okay. We'll go and we'll do it step by step. And of course, they face challenges with the competition that can do it then instantly. They do. Yeah.
I guess then my follow-up question to you is, again, you have a lot of experience doing this at iLedgends. How do you, when you're consulting a potential new merchant who is a prop firm, what do you tell them in terms of this should be the payment flow between your deposits, here's all your trading activity, and then here is the, let's say, payouts and withdrawals. Let's say we talk about CFD brokers and
No.
prop firms together. Kind of how does that look? Is it also a question of data, a collection of data? Because you just mentioned, if it has to go through a bank, let's say a transaction has to go through a bank, it's best for them to see data that will make them comfortable to conduct that transaction. In my layman's terms understanding right now, or thinking right now as we're speaking, I'm like, okay, if I can tie all of that data together internally, right? This is customer A. Customer A deposited 5 times over the course of the last 6 months. These are the methods. Then what did he do with that money? He traded that money. Let's say it's a CFD broker, or he bought these specific challenges. Here's the results of that trading those challenges. Again, these are in my rudimentary understanding, these are columns and rows in data sheets. And then once the customer requests a specific action, whether it's to refund him his partial profits, or a guy wants his payouts at a prop firm, if from a data standpoint, if you have all of this data collected and you could show it in some way, shape, or form, does that ease the whole thing? And is that how payment flows should be structured to alleviate any bottlenecks?
So absolutely, and the data is critical, but again, it's not relevant for each transaction.
I understand.
Right, but it's very important to before you start onboarding, before you close the commercial with the customer, that you agree on those things, that you explain to when we onboard a customer, we say, okay, this is how we work, this is how we do it. We work on a risk-based approach when it comes to the transaction monitoring. We will say, okay, certain transactions, certain amounts, certain jurisdictions, we will ask you for this documentation. Be prepared for it. And when we ask for specific documentation, okay, so make sure that you have it, because your policies and procedures say that you are collecting these types of documents.
Sure.
Referring to CFD brokers, They need to collect the copy of identification, address, source of funds, source of birth, above a certain amount, right?
Yep.
So we basically, when we onboard a CFD broker, I'll get to prop trading in a second, but when we onboard a CFD broker, we basically review their AML policies, right? So we know what we're doing in that area by saying, okay, we're reviewing their policies, we're checking what do they do, because they're a regulated financial institution. And then when we ask to collect something, we want to make sure that that information is available. Um, we inform the merchant when and how we collect, but of course there can be also extraordinary cases. And the merchant will often tell us, oh, great, this is exactly what we're collecting. This is exactly what we're expecting. And we can also ensure to align, okay, we're not collecting it, but actually, Eran, it's great. We will start collecting it for now. We know it will protect us. And we build, the merchant knows what to expect. And this is, I think, the most important thing when it comes to service, because at the end we are here to provide a service
Sure, of course.
for our customers to understand what they can expect when it comes to working with iLedgends. And we agree on those things up front, so there are no surprises usually coming from us to the customer and say, hey, in order to process this transaction, we need this and this. I'll get more into the detail in a second, but the same goes with counterparties, right? So if you now have a CFD broker or prop trading firm that says, I'm collecting settlements from PSPs, okay? Great. During onboarding, was provide us with a couple of invoices, agreements, so that we can whitelist those providers. So that when the transactions come in, there is no impact. And we follow a very similar approach with C2B, where we have a framework. The merchants know what to expect, and then only in certain cases we'll be collecting a certain documentation, so that when the payout needs to happen, there is no surprise. Because if you had a customer now that deposited with a CFD broker over 200,000 euros in the last 3 months, and you decided not to collect any documentation because there was no need for it, because it was a low-risk transaction, or you decided to collect something, okay? But if you decided not to collect, why would you now collect it on the outgoing payment to the same person? For why? It doesn't make any sense to me. Because it's the same person made the deposits, and now he's getting his profit, or he's getting a partial profit. So collect those things up front so that the merchants are not impacted in the transaction flow. And when it comes to prop trading firms, again, you can ask, you can agree, you can ask for certain, let's say, above certain amounts that you agree, okay, I want to see the onboarding of that customer. I want to see his activity, so that you really make these things fast, because those transactions, not only the incoming but also the outgoing, should be frictionless as much as possible. Nobody wants to be in a situation. Me as a customer, I don't want to be in a situation where my bank is putting my transactions on hold because they don't understand the nature of my business, or they don't don't understand why I'm now paying for dinner in Kenya because I went there with my family on holidays, and all of a sudden they block your card, right? Nobody wants to experience that. We're talking about impacting our customers' business at the end of the day with the decisions that we make as a EMI.
We've talked today a lot about, again, challenges, I would say, right, within the payment space, specifically for CFD brokers and prop firms. But I wanted to flip the script a little bit and ask you, if we look into the future, in terms of, let's say, global financial infrastructure, which again continues to expand, continues to evolve. We have machine learning, AI. That's a completely different story. We're not going to touch upon that today. But I guess, where are the real future opportunities for CFD brokers and prop firms that work with companies like iLedgends today to take advantage of, let's say, the modern and the future financial and payments infrastructure, and use it sort of as an enabler and not as a constraint in a way?
Absolutely, and this is how payment providers should be enablers, not restrictors. Of course, we need to restrict bad players. We are here to protect the financial system as a regulated EMI, and we'll do everything to do that. But once you're through the gate, once you are our customer, and we want to make sure that we enable business for you. And as iLedgends, we are very active. Also, we have not only our, let's say, Dutch EMI license, we also applied for MiCA license in Europe. We also have an MSB through which we also do crypto. So from that perspective, what you see more and more, the trend is that especially with international wires, stablecoin is becoming more and more an enabler. And this is something that we're definitely, as a company today, already offering to our clients. Offering that because it makes transactions a lot faster.
Of course.
We are able to collect, from different jurisdictions in stablecoin and convert it into the currency that our customer wants, whether it's euro, dollars, or any other currency in 41 currencies. And I think for us as a EMI, we continuously need to listen to the market demands and think about, okay, what are really the needs of our customers? What are the needs today of CFD brokers, prop trading firms? How can we enable them to enter into two new markets? How can we get ourselves into new markets and offer new payment methods for local collections? So local collections together with blockchain is, in my opinion, what we're going to see more and more in the future, where our merchants can collect locally in any jurisdiction. We can convert it there to USDC, send it over, and convert it into the local currency. So instead of a merchant waiting now for 3 to 5 days for a Swift wire, because corresponding banks, being very slow about it in many jurisdictions, collect locally, convert to crypto to fiat again, and the transaction, what we see, is there within minutes. That's what we're able to achieve, and but it doesn't stop there. You constantly need to see, okay, what is the future looking like?
I get your point about Swift. When people say Swift, I think about like this old school banking system, right? Or whatever it's called, whatever the official terminology is called. But I think Swift as a company, right? Because it is a company, it's also trying to get into cross-border payments with stable coins and all that. I think, at least from what I'm seeing.
Look, you see more and more players now advertising that you don't need Swift anymore, and you only need the stable coin. And we have instant. You see a lot of companies selling the dream, but still we're in a world, and I don't see that changing in the near future, where customers need to have both. And when Swift says, okay, we're getting into blockchain, okay, you see that also with the traditional banks, right?
Yes,
What
of course,
happened in the past, you see that also in banks, they were doing the business the way that they thought, this is how we do business. And then came the EMIs and the payment institutions that said, hey, we're going to do these things differently. We're going to onboard customers. I mean, what Revolut did, amazing, right? It's an amazing story where they basically revolutionized the whole banking industry for that perspective.
Yeah.
And then you see traditional banks trying to copy that in a way. Does it work? No.
Well, I think it's because it was based on demand. I mean, like you said, banks are like, we do things traditionally. We're going to continue doing them traditionally. I remember Jamie Dimon saying, no, it's crypto, blockchain, no. And then literally a year later, they announced, oh yeah, we're actually doing things with blockchain. We're trying to create our own internal stable coin. Now they're actually using it internally at JP Morgan Chase, right, for their own transactions. So it's like, okay. And then now we're at a point where it seems like, I think you're absolutely right, where it has to be, it's going to be, and it has to be a hybrid system. Traditional banks, your Swifts and your SEPA and these kind of networks. And then, yes, sure, the blockchain and stable coins, it all has to work together.
It has to,
because it has to have a compliance component to it.
Absolutely.
At the end of the day.
At the end of the day, yes. But I think back to the traditional banks. So you see a lot of the banks said, hey, one second, look what they did. All these fintechs, they build all these online systems. We can close our offices, our branches here that there's no need.
Sure.
And they a lot of them failed miserably because they're not built for it. It's very difficult to turn something your business into something else. It often doesn't work. It's very difficult to say, okay, I'm flying a jumbo plane and now I'm turning it into a fighter jet. You know,
Yeah.
it's a different thing. But yes, you're absolutely right that today you need to have the combination of it when it comes to your payment infrastructure. That it will always involve fiat wires, the traditional wires, and you'll of course have the utilization of crypto, blockchain, and crypto in general is also becoming more and more compliant.
Yeah.
MiCA is now kicked in. It's not crypto that was 2 years ago. It is very regulated. We treat fiat and crypto the same way. We are not saying, okay, crypto we can do this, fiat we have to do no. You have the similar risk, the same risk, and you need to approach any payment method at the end of the day in a similar fashion because it's a payment method. That's all it is. But when you're saying combining, I think it's not only the payment rails. What you see a lot of customers struggling with today is fintechs. They simply they rely so much on AI and automated service. But when something is really urgent, when you as a business, if you have now $400,000 stuck that you cannot receive from your supplier and you cannot pay salary to your employees, do you want to rely now on a chatbot or do you want to pick up the phone, be able to talk to your account manager and say, hey, I understand the transaction is on hold. I just sent the documents. I need this resolved immediately. And actually, that's what we are. What not we are trying. This is what I'm committed to say that I always want to give our customers like a private banking, traditional banking experience when it comes to the customer service.
Yeah.
When it comes to their ability to communicate.
Yeah.
On urgent topics, and this is something that we invest in a lot. That our customers can actually speak to professionals that understand their business when something goes wrong, because something can always go wrong. The question is, how do you fix it fast?
I think you make a really good point. I'm not going to name any names. I actually saw something recently, a story that was pretty much exactly like you described. Let's put it this way: a large merchant who again was needed to get money from suppliers and then over to their employees to make payroll, basically used just one. I'll call it a neobank account. I'm not gonna name names, but use the neobank where again everything is online. There's no branches. Everything is usually very quick, and it is this sort of virtual AI chatbot sort of experience where there's multiple layers of AI before you reach a human. And what happened was normally, traditionally, the transactions like clockwork every month. A couple of 100,000 comes in. This is essentially revenue or income. Some of it has to be split into many transactions and sent to employees as payroll. All of a sudden, 1 month, the neobank stopped that transaction, put it on hold, or maybe even rejected it. And again, the people working at the company were like, "Oh shit, we have a few days to make payroll. We were relying on these funds," and it's pretty much from what I read, it's the experience was sort of what you described. Okay, what do we do, right? Okay, well, we go through the official support channels. The official support channels is first an AI bot. Knowledge base FAQs, right? And then you have to, and then send an email. There's no phone number to call. And again, when we as businessmen, uh, I'm not used to that. Like that would make me very anxious. And I would probably even get upset about it because it's like, what are we doing here? And then goes back to our earlier conversation today where, okay, next time I'm not going to do that. I'm going to like open 3 more accounts at other, maybe even not neo banks, right? I'm going to go elsewhere and I'm not going to send all of that capital in one movement. I'm gonna split it up, just so if this happens again, I don't have to deal with
In the terrible situation. Yes, and this happens every day, and this happens to customers which are considered medium risk or even low risk, and it's terrible whether it's with a neobank or with a traditional bank where you have nobody to talk to. They just tell you, send an email, and the gods of compliance will get back to you. You know,
If it's somebody will
and
get back to
they
you.
will get back to you when they find it's appropriate to get back to you,
Mhm.
and businesses can collapse because of cash flow issues.
Yeah.
And sometimes, here we're talking about the transaction to pay out employees. We're impacting people's lives.
Yes.
The same goes for an account being completely frozen
Mhm.
because of an investigation, which can turn out to be nothing or can turn out to be something terrible. But
Yeah.
accounts completely being frozen. So yes, this can destroy businesses, and this whole um, behavior of these EMIs or banks, where they say, okay, look, this is what compliance, and we're investigating.
Mhm.
We will not communicate with you anything. This happens every day.
Mhm.
And this happens to sometimes customers that have been live,
For a
for
long
2
time.
years,
Uh-huh.
and so often for wrong reasons.
Mhm.
Of course, as a EMI, we cannot tip off if there is now, something really
Sure.
is happening and so on. But often it's just internal decisions of internal teams that say, okay, this is what I'm going to do, and everybody has to wait for me.
Mhm.
And yes, the customer has nobody to talk to, nobody to give him any updates. It's completely silent for no obvious reason, and it's a terrible experience.
Mhm.
I have a good friend of mine. He's luckily a successful businessman. He went with his family on holidays, and yeah, he's sitting there, having dinner. And the transactions simply do not get through, get declined.
Mhm.
No way to contact, no way to call. Hey, my transaction is being blocked. And simply send an email. He had to wait 2 weeks to find out that they closed his account without any notification. Luckily, he has a few other cards, but
Uh-huh.
different scenarios that happen every day, and communication is so key. Understanding the business is key, and support is so key. And we invest so much in this because we want our customers, to be treated the same as a bakery shop being treated by as a traditional bank.
Mhm.
We want to give them that experience. We want to combine the fintech world together with private account management experience, where our customers feel that we really understand their business and they're in good hands. They don't have to go to sleep at night worrying what's going to happen to our accounts.
Mhm. Mhm. Great.
No.
I guess to wrap up the conversation today, let's wrap it up on a more
Yeah.
positive note. I guess in terms of your experience with clients at iLedgends over the last 3 years, so let's say firms that get the payment side of it correct, they get the compliance side of it correct, and the infrastructure side of it correct. How do they build on that to basically scale their businesses, right? And kind of get more trust? Is it a matter of if they've got all these ducks in a row, sort of, and everything is working well? I mean, is it like improving processing times for their clients, let's say, in terms of the payments that they need to incoming, outgoing payments? And is that what builds like the additional trust, or is it something where you know, they've got it right. They've been working, let's say, with certain banks or institutions like yours, and then they can go to the next. Again,
Yep.
they diversify, they scale in different regions. They go to the next EMI that they need to sign up with, and they're like, "Well, we've already got everything, and we already know what we're doing.
Yeah.
We just
Yeah.
needed extra accounts
Additional
and things like that."
capabilities. Yeah.
Like, what do you think, kind of how do you scale your business if you've got all of these things, working the right way?
You absolutely scale your business because instead of dealing with tier 2, tier 3, 4, 5 providers, you'll be working with the better providers. At the end of the day, the same goes for us as an EMI. We have the compliance in place, we have the processes, procedures in place, and we have built in history in the market with satisfied customers. We have a clean track record that helps us to engage with the larger tier 1 banks.
Mhm.
And the same goes for customers. And that allows us to give better services to our customers and to have a better payment trail at the end of the day. And for us as an EMI, when we look at a merchant, we see everything. If you're a prop trading firm or a CFD broker, we know exactly what we're looking for from a risk perspective. It's okay, this is a great merchant to work with. it comes down to the experience of the management board. You go different things, the compliance, the platform, the customer satisfaction. We check all those things. We see, okay, what are the reviews of the customers, of the consumers? Are they happy, or are they screaming, this is a scam?
Yeah,
Right? So
yeah.
we look at all of those things to do our due diligence, right? And to determine the quality of the merchant, to say, okay, yes, prop trading CFD, great, excellent merchant, and this at the end of the day will help the merchant. Having all of these things in place will help them to work with better providers, which will help them to get better payment methods, faster payments, local payments, crypto, all in one place. And this is, I think, one of the most critical things, because too often we see merchants that lack such important points where it's okay, thank you, but no thank you. And so often we also see players that I think if many of the banks and EMIs would know what they're doing with this industry,
Yeah.
they would love to work with those customers, because I think personally the CFD, the prop trading firms, amazing companies out there, huge fintech companies in my opinion. These are great industries, and we're very happy to facilitate those that have everything that they need in place.
Great. Awesome. Well, Eran.
Yes.
Sorry, right? No, it's okay. Aaron. Yeah. Eran, it was great to speak to you today. Thanks for taking the time. I know we will both have very busy schedules. Thanks for taking the time to talk about iLedgends and really the whole international payment space and what's going on. We wish you the best of luck, and
Thank you so
hopefully we'll
much.
speak to you again soon.
Thank you so much for having me. It was a great conversation, and yeah, I'm very happy, to be here to continue to support this industry, and for sure we'll speak soon again.
Yeah, absolutely. Thanks
Thank
a
you.
lot.
Thank you.
Cheers.
Cheers.